Awesome. So, welcome back, everybody. So, this is Emerson. We're talking about a trade recap I took on Wednesday, 2023, which is last week. I took a trade on ES short on the London session. So, I'm going to recap why I took it, and it was a loser. So, let me dive into this trade. So, I'm going to be honest with you guys. I've been really undisciplined when it comes to journaling my trades right in the moment, so I let them stack up, and once that happens, it's harder for me to go back and be like, all right, cool, I was feeling like this, or I remember there was news, so that's why for the news part I said I don't recall exactly what was happening, but it looks like there was an aggressive move to the upside. So my thesis, I'm going to be honest, there was no real setup. I kind of chased the move. I was basing it off of SIBI. Yeah, like I was saying, the 2-minute CB market shift, and looking back into the higher time frame, there was no real reason for me to go short. I apologize for the loud dog in the back. So I entered this in London session, and on top of that, I failed to look at the higher time frame. So recently, I've been not backtesting, but rewinding and looking at what I've been making my mistakes on, as I've been taking a lot of losses, and I have noticed that I have failed to look at the higher time frame, like the 4-hour, the daily, and execute according to the flow of the market, right? So I look at a 5-minute and I see a market shift, and then I simply take a trade off of that time frame, even though, let's say I want to go short because they see a market shift to downside while the market is clearly in an uptrend or potentially going to go in an uptrend. So let me dive more into detail what I mean by that. So yes, for the last couple of days, when this trade was happening, was actually in a very tight spot. So let me show you. So I took this trade on the Wednesday 17th. So it was actually this nice bullish day. So I'm gonna highlight this whole time frame, the market was going sideways. I remember on the group chat we were talking about how the market was not really doing much, and it was scalper mentality. So the market is being sideways. So here I got too confident, and I kind of wanted to go for the sell side liquidity, which ended up biting my ass because I was not prepared for it, and there's a lot of context that was showcasing that the market wanted to go higher. So I ended up taking, what the heck? Sorry guys. I ended up taking a trade on London session around here at 3 a.m. So when the market was looking something like this rollover and then retraced back into this area and then fell off, I saw this quick displacement to the downside, a retracement. I was like, all right, cool. It looks like we might actually go tag the sell side liquidity, but I really haven't any deep analysis on the higher time frame. So I actually went back today and I annotated the F out of a chart, which is on a 30-minute. This is the same area. And I noticed that there was no real reason for me to short the market. So if we look on a 1 hour, this is a 1 hour, 30 minutes, sorry. But on a 1 hour, we have a clear 1 hour BISI when the market rallied. Then it retraced back into it, respected it very nicely. And then we kind of just consolidated within this whole range. This is the same time frame we were talking about on the daily, but yes, on a 1 hour. So we go on a 30-minute, you start seeing something very, very critical. So you start seeing that we are accumulating a lot of buy side liquidity at the highs. So I marked out the close, the body close, not the wick close, right? So that's the most important part. So the wick close, no wick close closed above any of these levels until we finally broke out to the upside. So that is very important because if we look at this, we have a 1 hour BISI at the lows, and then we have a wick purge, meaning that the candle ended up closing below the previous candle close. So here the candle close was at the high of 41.16, right? And here the low came in at 41.14. So 2 points below this previous purge. So therefore, even though the market didn't really go lower, much lower than this area, it quote unquote still closed below because it was a candle close. So that's very important to take note of. So you know how ICT talks about how the first thing you have to look is where's the purge happening. So if we have a purge to the downside, most likely the market wants to gravitate to the upside. If the market purges the buy side liquidity, most likely wants to reverse. Not all the time, but in this context, worked pretty well. So as you can see, we had a low here. The market moved higher, retraced, did not really make any sudden move to any lower. Then we kind of like started slowly grinding upwards, not breaking this close of this candle from here to here, this down close candle here, or this one. Can even move here, not even breaking this one. Okay, so now the market fell off again, taking out this low and then taking out this low. Many people might see this low, oh, it never really got taken out. Yes, it did, because if you look closer, you can see that this candle close was lower than this wick here. So that's the important part. That's the first wick purge. Okay, that was very important. In hindsight, I can see that and say, yeah, it makes sense why I should not be looking for shorts, because sell side is getting already tagged while buy side is still accumulating. You know, and the market is always going to gravitate towards where is the biggest pool of liquidity. So if it leaves a huge pool of liquidity on the upside, most likely it's going to reach out there, even if it means 2 weeks from now, a month from now, or a year from now. It's going to always come back to it. So this was a perfect scenario of why or how the market was accumulating to the upside. Okay, so then we have even more in detail. We have a 1 hour BISI again. After we have a rally, I can show you guys the 1 hour BISI right here. From this strong rally, retrace back into the market. The market retraced back into this area, and then now we have a body close. Same concept. The body close, right? That's where our main focus is at. So we have a body close from 41.28 in 3/4. As you can see, the market traded back into here. We barely managed to close below it. We never closed below this level. Same thing, we purged once again, but never closed below it. Then we have a decent purge where we closed below this body close, right into this 1 hour BISI, with the wick purge coming in at 41.23. That's 5 points below the previous close. So that it's very significant, because now we have a wick purge from the lows, a BISI lining up, and then we have a second purge where we start seeing the buy side has not been tagged, or it's potentially going to get tagged. So I ended up not noticing that fact, and I ended up taking a short, which contradicts what I'm talking about. But in is reviewing my trade, I analyzed that my mistake was trying to go too short when the market was actually telling me that there was no real, the sellers were already exhausted. Okay, so I took the trade around Wednesday 3 p.m. right here. So I'm going to dive into a little more detail, like 1 minute time frames. So this is the same thing, same concepts, consolidation that we're talking about, but I'm going to go into a 2 minute. I mainly trade on a 2 minute time frame at 1 or 5. So the market opened for London at 2 a.m. I start seeing it. We have the split to the upside. We take out some buy side, and then in my mind, I start seeing this displacement. Let me take out the drawings for a second. I see the displacement lower, and I'm like, all right, cool. We got displacement lower. We got a market shift here. We have a BCV formed at the highs. I'm gonna wait for this to retrace and then short it. It's not as easy as that, because my context, I was lacking the context of a higher time frame, like a 4 hour, a 1 hour, and a daily. I thought the market was gonna reach into. Let me make sure that I share it. I was expecting the market to reach into this sell side liquidity here. Let me make a highlighter. I was expecting the market to reach into the sell side liquidity, which it didn't happen, because due to the reasons that I explained. I was expecting the sell side liquidity, this purple line here, this level to get tagged, but it didn't make sense why I want to short when there was a lower likelihood of it happening, because it had already extended way more than it needed. So looking back at it, I'm like, all right, cool, it makes sense why I got stopped out. I learned from a mistake. And one of the biggest issues that I did, I oversized here. I ended up taking 3 contracts rather than just 2, which is my usual like size lot. I ended up taking 3, and my stop loss was really tight. It was like less than 3 points. But the point that I'm trying to get to you guys is that I ended up like over leveraging, because one, I thought I was cool. You know, I was like, I got this. I'm gonna catch a nice 10 points or 8 points, whatever the move was. On a 3 lot, I'm gonna make a nice $1,000, and I feel like this has been stemmed since I took the London trade like 2 weeks ago. I feel like I've been a little caught up with that trade, and I haven't been able to get over it. So and that's also due to the fact that I am not disciplined with my life in general. I need to focus up and really narrow down what I've been doing. I have been letting my trades stack up in the sense that I haven't been reviewing them. I haven't been disciplined and waking up early, X, Y, and Z. So all this stuff has been carried into my trading world, and I have noticed that instead of me profiting, I actually been losing. So if you guys take a look at my TradeZella, like I talked in my previous video, I'm going to be honest, for the whole month of May, I only have a couple days, and most of the days have been red. So this is Wednesday 17. It was a $300 loss, and as you can see, I already have gone in detail. It was an ES short. I lost $300. I traded 3 contracts. My stop was 41.30, and then my target was 41.19.50. So these are the screenshots. No real setup in my opinion. If I'm really honest with myself, it was more of a chase of FOMO. I chased, not in plan. Failed to look at the context. Failed to look at the higher time frames, etc. And then this is the things that I feel like I made a mistake in, was that I end up basing my most of my trades on small time frame and not focusing on the higher time frame. In addition to this, I'm very undisciplined right now. I've been very sporadic with my life. I've been very off, like I sleep at different times of the day, and it's just not conducive to my trading world. So that's the thing. I don't have a specific model that I'm trading. Recently, I'm kind of like just gambling. When I was trading this, if I recall, I was actually just watching a movie with my girlfriend on the side, and I was not fully focused on what the market really wanted to tell me. So I was like, I'm going to take this trade. It looks like it's good. And that's not the way to trade. Like you have to be 100% focused, 100% sure that what you're doing is accurate. You have back tested, you have a lot of data, and I didn't have on this trade. It was more about a gamble. And I'm being honest with you guys because I don't want you guys to make the same mistakes, because I feel like everybody falls into victims because we always have a lot of shit going into our life, and we don't really take a step back to analyze and really say, you know what, I'm not trading like a professional trader. I'm gambling to the degree which I am here. I was gambling, if I'm honest with you guys, because I don't have a plan. I didn't have a structure. I didn't have a plan. I don't have a set model that I'm trading off, but I'm mainly just trading off a structure, and with the lack of not even knowing what the higher time frame wants to tell me. So that's my biggest issue on this trade, and I oversized. Instead of doing 2 contracts, I did 3. So therefore it's a red flag in my opinion, and that's why I graded my trade as a D. Or even F, but essentially it was a really bad trade. And as you guys can see, my stop loss was really, really tight, but still, let's say I end up having a super massive account, this would have been a stupid trade that didn't have to happen, So hopefully you guys learned something from this. And another reason, I was kind of ended like this, but another reason why I feel like it was a stupid trade was because of NQ. As you can see, this is the day that I took the trade, Wednesday. Where is it? Right here. This black box. Wednesday, we didn't even have a market shift to the downside. We have a lot of sell side liquidity stacking up, but every dip just continues to get bought higher. So on ES, on NQ, it made a new high. So there was no real reason for me to be like, oh, I want to short ES because NQ is extremely strong, And if you want to short the market or want to like go against the flow, you want to make sure that all the indexes line up. So if ES is going higher and NQ is going lower, you can't really trade like that because they're not in tandem. They're kind of like separate, and one is doing one thing, the other one is doing another, and that's not a good indication of being successful. You want to have consistency in your trading, which I haven't been having for the last couple of weeks. So that's mainly it. I'm gonna share this TradeZella journal on the group chat. So if you guys want to go more in detail, look at the screenshots X, Y, and Z, you can. But hopefully you guys find this video insightful and you guys don't make the same mistakes that I have been making for the last couple of weeks. Take it easy.